96,000 options on Amazon. What do they mean? In this video, we are going to analyze these unusual options to determine what the large investor is doing with Amazon. Are they bullish or bearish? These trades were done at 11:37, a little bit over an hour ago. It is now 1:03 p.m., May 23. And you'll also notice that at that same time, there was these 85,000 options done also, but a different date. So we're going to analyze this and then show you how we are trading Amazon based on these unusual options. So let's get right to it. So first one up, June 16, 95 strike calls being executed, much lower than the bid price. You'll see 21.95 is much lower than the bid of 22.05. So it looks like they were selling this 95 strike call. And you'll see here the 95 strike calls are right over here. You'll see here that there was an open interest of 94,000, which is much greater than the 85,000. We believe they were selling this to close their position. This was originally they had a 95 strike call. They took profits, sold it. The delta was at 96, and they were readjusting their deltas, rolling it out to Septembers. So you'll see here for their Septembers, this is the 95 strike call here. You'll see these 96,000 here. That is greater than the open interest of 1,668. So they rolled it, adjusted their deltas to 85. This is about that delta where the stock replacement strategy is. And so they bought this 95 strike. It's going for currently $2,500 per contract. And so you'll see here, this is a bullish trade. So you also, based on the pricing, they paid $2,520, so $2,520. So they basically closed off this position and opened this new one. And about how much is that? $2,520. And you multiply by the quantity of 96,000. This trade had $241.9 million. This is the value of this trade. So definitely a very large institutional investor that has taken a bullish position again on Amazon. And this is basically like owning 85 shares of stock, because there's 85 deltas. This is 85 shares per contract, basically. So they're using options to leverage Amazon stock, and instead of having to buy 100 shares, then which would cost a lot more. So as you can see, Amazon was at a high of last year at 146 and currently trading at 116. So it went down, but then at the beginning of the year, it started to come back up. And interestingly, it kind of looks like the logo of Amazon, the arrow here. So kind of coincidental, right? That this is now supposedly going to be going further up based on these unusual options. And so the way we are trading this in this shorter term period is that because this is bullish, we are selling the 120 strike calls. And then by selling this, it's going for about this amount. And then we are then going to buy the Julys, the 59 days, further away, we're buying the 120s over here. So what we're then effectively doing is creating a calendar spread, right? And so currently it's going for about $200. You'll see here, this is the trade. Let's take their trade off. This is also bullish. You'll see here the price will go up. There is a break even here at the upper end. So if it rallies past 127 by expiration in June 16, then it would be a loss. We don't think it would rally that much. That's why we went with the calendar. And another main reason why we wanted to do a calendar is because of this high Vega positive that we want. Because Amazon is actually trading at a very low IV percentile of only 3%. You see the current implied volatility percentile. This is very low for Amazon, so we expect this to increase. There's a higher probability of it increasing than it will be decreasing. So that's why we wanted to put on a trade that had a positive Vega to take advantage of that volatility increase. And so this is the trade. We get to also have that positive delta, and then we get to choose how many contracts we want to decide how much delta we want. And we also have a positive theta. So the value of these options do not decay, but they gain in value as time goes on. So we like this calendar spread, and targeting the 120 as our optimal max profit. We may take profits earlier, even before it is at 120, or if it starts to drop below, we actually have a lower break even at this price. So Amazon can drop to about 114 and we will not be at a loss at expiration. It is currently at 116. So this is also kind of a built-in hedge. This calendar strategy has a built-in hedge already, where we can cut our losses if Amazon starts to turn the other way. And so this is why we like this strategy. I'm very curious to know what everybody thinks about Amazon. Do you think Amazon will be coming up? Is it going to be bullish? Is it going to keep coming up to create that smile on Amazon's logo? Please comment below on what you think, and smash that like button as usual. Take care, everybody.